Hello, this is Pat Walker at Mission Winners, and I'm making a video for bit 2. And you ask a good question. Is your preference only to buy stocks that are approaching all-time highs based on solid pattern and fundamentals? That is a great question. I'm not really concerned about stocks hitting all-time highs. I think that's nice, but it is definitely not compulsory to hit stocks hitting all-time highs. And here I'd like to show you a couple examples of what I'm talking about. Right here, Tesla. When we bought Tesla through here, this little shelf right here, we were not buying it hitting all-time highs. And you can say, how do I know this? Well, maybe it was. Hold on a second. Nope. It was well off. Oh, right here? We were buying it right down here. So it was near all-time highs. I'm going to scrunch this up a bit. Yeah, it was near all-time highs, but not exactly at all-time highs. What do I look for, though? I'm going to show you another example, just to drive home the point, though. Here's Baba. We bought this right here, and I'm going to show you the weekly. We bought this right here. It was near all-time highs, and you could say, well, was it really? Well, it was higher there. So it was near, but not quite. The key point is this. I am constantly looking for chart patterns that are really clean and simple, that will give us a clean and simple entry. And if it's at all-time highs, near all-time, that's fine, but it doesn't have to be. If it's close, that's just fine with me, and it allows us to make money. The biggest point is this. I constantly want a simple pattern. Why? Two big reasons why. I want everybody to see what we see, and that increases the odds that they will act on it. At the same time, I love clean and simple chart patterns because that clean and simple chart pattern will give us really tight, precise entries. And I'm going to give you a couple of examples right here. This was a keyless stock right there going through those tops, and it worked like a champ. I'm going to show you another one. I'm just grabbing these at random, okay? Just to let you know. Let's try this one. Well, there's Tesla. We showed you that one. KL. When KL lifted through this top here, I'll enlarge the chart for you. When KL lifted through this top right here, it was just a nice steady trend. That is what we're looking for. We'll do one more. This is from a couple of years ago. FANG. Rallied up, pulled right up there, and then made a nice move. A nice move. The moral of the story is I always want stocks that are in leading groups that have either great earnings and or great sales. And I will quantify that statement. 40% or higher for earnings, average sales of 40 to 45% or higher the last 2 quarters in leading groups. And I want a clean and simple chart pattern that everybody can see. And when it pushes through those tops, I want it pushing through on volume. Clean and simple line, it's good above the line and it's bad below. That works like a champ for us. That's what we're after. Yeah, overhead resistance, I agree with you. But here's a fact. If a stock, let's suppose, hits $100 a share, and then it steadily falls down to 50, and it stays at 50 for a year or two, and then there's a clean and simple breakout on heavy volume, those 2 years that it's been languishing around $50 is enough time to get rid of a lot of those sellers. They've just given up on it. Therefore, there aren't many sellers left. Any buying can help push it up in price. That's what our research has shown. So anyway, bit 2, thank you, and I hope you're having a wonderful, safe weekend.